You've been working killer hours every single week and saving for a down payment and even paying off some credit cards. But your credit score doesn't seem to be changing as much as you'd like. And so now you need to know, can you still get approved for a loan even if you have bad credit? In this video, we're gonna go through a step-by-step guide on how to get approved for a loan even if you have bad credit. What's up? What's up everyone, my name is Fernando and myself, my wife, my beautiful daughter have all been investing in real estate for the last 3 years. And I am also a licensed loan officer here to help you get into your investment property or your personal home. So let's get into how you can get approved for your home loan. So there are 5 key components that any lender is going to require when anybody applies for a home loan. The first and obvious one is your credit score. The second one is your debt to income ratio. The third is your employment history, your down payment options, and lastly, your actual income. So let's get started with your credit scores. The lowest credit score that anybody can have and still qualify for a loan is a 500 credit score. However, you're gonna have to put down a 10% down payment for that. It's using the FHA loan, and every loan officer should be able to help you with it, but they will require a 10% down payment. So if your home costs $100,000, you're gonna need $10,000 down. If your home costs $500,000, you're gonna need $50,000 down. This isn't the same once your credit score hits 580. At 580, you now qualify for 3.5% down payment. So that same $100,000, now you only need $3,500. Imagine getting into a home for only $3,500. I'm not including the other fees, but just believe that's the down payment. Between 580 and 620 still qualifies you for that FHA program. Once you're at 620, you now qualify for conventional financing. That's a conventional loan, and that's for 620 credit score and above. But as you can see, even with the 500 credit score or a 580 credit score, you're still able to get a loan. And no matter where you are, if you want to figure out how do you improve your credit score, you're gonna want to learn how a credit score is even calculated. And they're calculated with these 5 things. The first one, your credit score is calculated based off your payment history, which is 35%, makes up 35% of your score. The amount owed on your current credit cards, we're talking about the ratio, and that makes up for 30%. So if you have a $5,000 credit card and you owe $5,000, that's 100% utilization, or that's 100% of how much you owe on that card, and it's the credit limit. That's going to destroy your credit. You're gonna need to either ask for a credit limit increase so they can boost that up to 10,000, and now what that does is it makes your credit utilization go from 100% to 50%, right? So I recommend calling your bank and asking them if they can increase your credit limit to 10,000. Even ask for a 3x increase. If they can increase your credit limit from 5,000 to 15,000, that means you'll only have $5,000 on a $15,000 credit line. In that case, it's only 33%, which is way better than your 100% utilization. The third thing to calculate your credit score is the age of your accounts. If you're just trying to build your credit and you only have credit cards for a year, then your credit score could be extremely low because you don't have any credit. So what you can do is get on a friend or family's credit card. Have them add you to their credit card so you can get some of their age and you can get some of their credit limits. But you have to make sure that they're smart with their money. They can't have late payments. They can't be racking up their credit debt, they'll be maxing it up to 100%. You want to make sure that they keep it under 10% if they're going to add you to it. But this is a hack so that you can start building your credit as well. The length of credit history, that age, is 15% of the actual score. That's the weight. The next section we go to is the new credit, and that only makes up 10%. So it's pretty small. I don't recommend getting any new credit when you're trying to apply for a new loan, because credit inquiries right when you're trying to apply for a home loan is not a good sign, and too many could get you denied. You want to aim for about 1 every 6 months. 1 inquiry every 6 months is pretty safe. You can get to 3 in 12 months. That's reasonable too. Usually loan officers will just ask for a letter of explanation. If you were actually approved, what was that card for, or what was that credit inquiry for? And lastly, you have credit mix, which is 10%. Credit mix is more like student loans, car loans, credit cards, lines of credit, other types of personal loans, home loans. All of that are mixes that add up to 10% of your credit score. Remember, in all of this, the credit system is trying to figure out, are you trustworthy? Can I give you different types of loans, whether it's a loan for your boat or your motorcycle or whatever, and are you able to make at least the minimum payments on time every single month? Are you credit worthy? Yes, that's your payment history. Can you handle a large enough credit line? if I give you $15,000, are you gonna always use $15,000 and only make the minimum payments every month? If so, it's a little risky. Or do I give you $15,000 and you only use $3,000, $5,000 and pay off the majority of it? In that case, I may give you some more credit. You gotta think how the banks are trying to think. We've come this far and we've only talked about credit and credit ratings and your credit score and how your credit score is calculated. So go ahead and like and subscribe if you've had value up to now, but we're not done yet because I'm giving you so much value to help you get approved for your home loan, even if you have bad credit. So let's get into your debt to income ratios. What is DTI? What does that mean? What is the debt to income ratio and how do I even calculate it, or how will other people calculate it? This is how it's done. For an FHA loan, there's two debt to income ratios you're gonna want to understand. The first one is your top ratio or your housing ratio. Your housing ratio for an FHA loan, which is the one that I would recommend if your credit is below 620, then you're gonna wanna go FHA. And here's how you calculate that. All you do is take the projected house payment and divide it by your gross monthly income. So let's say your house payment is going to be $2,000 and let's say your income is $4,000. You're at a 50% housing ratio right at that moment. FHA loan does allow for a 50% housing ratio or top end ratio. Again, that's a $2,000 mortgage payment with $4,000 gross monthly income. But what about all your other debts? Like your credit cards, your car loans, your boat loans, all of that needs to be taken into account. Maybe even if you pay child support, all that information is gonna have to come out and it's all gonna have to be added into your debt to income ratio, which is where we get to the bottom ratio. The bottom ratio or the total debt ratio. In that instance, you're gonna take the housing ratio plus any other debts that you have, only the monthly minimum payments, you're gonna add those two together and then you're gonna divide it again by your gross monthly income. So same example, let's say it's $2,000 mortgage and you're gonna add another $300 car payment with another $200 in credit card debt, which is the monthly minimum payments. So now it's $2,500, and then you're gonna divide that by the $4,000 of your actual gross monthly income. If you do that, you get 62.5%, which is above the total debt to income ratio allowed for FHA, which is 55%. So it's pretty awesome that somebody can actually get a home loan with 55% debt to income ratio. That means of the income that you bring in, 55% of it is used for expenses. So for every $100, $55 is just gonna go to your debt and your mortgage payment. That's a lot. It's a lot of debt and it's a lot of mortgage payment and it's a lot of stuff that has to go somewhere else, right? But I think it's really cool that we can still qualify for that. So just to reiterate, that bottom ratio max is 55%. Here's an easy trick to figure out exactly if you'd qualify. You take your gross monthly income, so let's say it's $4,000, and you just multiply by 55%. That's $2,200. That means $2,200 has to be the max that you have to add up for your mortgage payment plus all your debts. So if you have a mortgage payment of $2,000 or you want to get a mortgage payment of $2,000, that means the max amount of monthly recurring debt that you can have is only $200. Now this does not include utilities, but it does include your card payment, it does include your credit card debts, it does include child support, it includes your boat loan, it includes student loans. So you have to make room for all the other debts that you might have, plus the mortgage payment you're trying to take on. So let's say you got your credit score and that's good to go. You're over 580, now you qualify for the 3.5% down payment, and then you looked at your debt to income ratios and you qualify because you bring in a good amount of income and you have a decent amount of debt, but you still qualify because, like I said, you're at that 55% mark. So now they're going to ask you for employment history, and they want to check that you actually have 2 years solid employment history. This is if you're trying to qualify for FHA loan, right? The one that has that lower credit. And they're going to see, have you been hourly? Have you been salary? Do you have commissions? How do you know? If you're hourly, they're going to take the average of the last 2 years. If you're salary, they're going to take the most recent promotion that you've had, even if the last 2 years you haven't had that payment. If they can show that in the last 2 months you've actually received a promotion, or maybe you can just show a letter that shows you're going to be receiving this new income at the start of the next month, then you can go ahead and take that and qualify for that higher income. But if you're hourly, they're going to have to look at the last 2 years of what the average that you've brought in hourly. Same thing with bonuses and same thing with commission. If you are commission based, they're going to take the last 2 years average of commission. Even if you've had a killer year this year or the last year, they're going to check the last 2 year tax return. And if you're self-employed, there's a few ways to get around found it, go ahead and comment down below if you're self-employed, and I'll try to make a video specifically for you. But there's bank statement loans and there's other creative strategies that can help self-employed. You're gonna get higher interest rates, but nonetheless, my goal is to help everybody get into a home. And even if you're self-employed, you can also just provide 2 years tax returns and they're gonna go off of that. Getting into some of the last things that a loan officer is gonna ask you is, what are your down payment options? How are you gonna come up with that 3.5% or 5% or 10% down? Where do you have this money? Is it in a brokerage account? Is it gonna be a gift from a family member like your mom or your dad? Or do you have the money actually sitting in a savings account? What they're also gonna wanna see is, if you use that down payment, are you completely depleted? Like, is that all your cash, or do you have some reserves? Ideally, you wanna have 3 to 6 months reserves so that they know they're not gonna wipe you dry when you put that down payment down. Drop a comment below if this video was helpful and you have more questions. This is how you can get approved even if you have a low credit score. This is how you can get approved for a home loan so you can start living in there. Maybe you rent out the rooms, maybe you get creative so that you can make up other income, but this is about how you get qualified and approved for a home loan so you can start paying your own mortgage instead of someone else's. I'm a qualified loan officer, so DM me the word FHA on Instagram at itsfernandocorona.com, or go ahead and send me an email at info@remotehelper.com, and then we'll go from there, and I'd love to help you out.